Hello there, this is James and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Wednesday. In today's program, I want to sort of basically do a brief update on what we were talking about yesterday regarding a certain visit to Taiwan and a couple other things the market is focusing on, plus the reasons why we're seeing a little bit of dollar strength at the moment. But before we get into that, don't forget, these little videos are for educational purposes only. Good morning to you too. Good morning. Like I say, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. With that out the way, let's get started. So let's start off with obviously Nancy Pelosi's visit to Taiwan and China's response. Now, don't forget, China was extremely upset about this visit. And yesterday's afternoon's video, we went through a couple of scenarios or a couple of things that China may do in retaliation to this visit. And basically, this wasn't a real surprise. We did expect them to do something. But China's announced it will hold a series of live fire military drills in the air and the sea around the island. Obviously, this is not a very peaceful way of handling the situation. But like I say, the market did anticipate them to do something of this nature, to basically say they're very upset about this trip. The real sticking point, though, in my opinion, is not what they're going to do while Pelosi is there, is what they're going to do when Pelosi leaves. Are they going to put actual additional sanctions on Taiwan? Are they going to make it more difficult with trade, etc.? So it'd be interesting to see what they do when Nancy Pelosi actually leaves. But for now, their response is to hold a series of live fire military drills, like I said, in the air and the sea around the island. So, of course, this is obviously spooking the market a little bit, but not as much as it was yesterday. In other news, sterling traders, which I'm one of them, I like to trade the cable. Sterling traders are bracing themselves for the biggest interest rate hike by the Bank of England in 27 years. The BOE is expected to raise rates by 50 basic points tomorrow, and that's the biggest single increase since 1995. In fact, in a recent Reuters poll, 70% of the market expects 50 basis points, which is not surprising. Not surprising when you see the inflation in the UK at 9.4, with many people expecting it to go to double digits before the year is out. Because of this event, and because I'm quite taking a very keen interest in this event, and we'll have a quick look at the cable in the moment, I will be doing a watch along of this event live, obviously, because it is Tixee Live, of the Bank of England interest rate decision. Thursday tomorrow at 11 a.m. I will be going on air, though, 10 minutes beforehand, like I normally do, so we can have a quick chat about it first before it's announced. So don't forget, tomorrow, Thursday, 10:50 a.m., I'll be going live with Tixee Live, watch along, Bank of England interest rate decisions. But anyways, have a quick look at the cable and have a quick look at the market in general. Okay, like I said, we have seen a little bit of dollar strength, and I'll talk about that in the moment. But really, it's still around that key level again of 121.976. It was trading or hovering just above it earlier on in yesterday's session, but until we had dollar strength, which we'll have a look at the reasons why in a minute. But now it's capped at that level of 1.21976. Be interesting to see what it does do on the back of the Bank of England interest rate decision. Don't forget, we'll go through the scenarios tomorrow when we do the live. Just a quick look at the euro. The euro, again, like I say, trading way below that key level now, 1.02684. We have had dollar strength again, currently with a teeny bit of recovery, 1.01819. There was interesting chat again. Many people are expecting it at some point, and I'm one of them. I can't give you a time frame, but many of us are still thinking that the euro is going to go to parity again at some point. If we look at the dollar yen, again, we can see dollar strength again. It was under a lot of pressure yesterday with the safe haven rushes into safe haven because of the Pelosi trip. But then since then, we've had some dollar strength. And again, I'll explain the reasons why in a minute. It's now trading at 133.13. And we have a quick look at gold. We spoke about gold yesterday in quite in detail because it has got its shine back as a safe haven. But because of the dollar strength, it's capped it at that level of 1788, which is a key resistance. So it's currently trading now at $1,767.57. So why do we have dollar strength at the moment? Why do we have dollar strength at the moment? It's not just because of the safe haven status. It's not because of that. It's not because of that. It's because of something else which happened yesterday. Anybody want to take a guess? Anybody want to tell have a guess? What is this new sort of dollar strength? Why are we seeing dollar strength at the moment? Anybody want to have a guess? Anyone? No? Okay. Well, basically, don't forget, we saw dollar weakness last week for two reasons. Okay. A, for one, was the fairly dovish statement. Oh, hang on. Do we have a guess? Aussie dollar. Yeah. Hello, Philip. How you doing, buddy? Aussie dollar. Yeah, we'll have a quick look at the Aussie dollar in a minute, actually. It's a good one. Commodity currency. That's a good point. Have a see how that's benefiting with gold. But anyway, like I was saying, my point being why we're seeing dollar strength at the moment is don't forget, last week we saw dollar weakness, and that was down for several reasons. One reason was the fact that we had a fairly dovish monetary statement from the FOMC and press conference, which meant that they basically said that they would take in economic data to make their decisions. Then we had that very negative GDP reading of negative 0.9, which meant technically the US is in recession. So everybody suddenly thought the Fed is going to be less aggressive with interest rate hikes until yesterday, as we had more hawkish talk about hefty interest rate hikes. San Francisco Fed President, what's happened there? There we go. Fed's President Mary Daly and Chicago Fed President Charles Evans both spoke about hefty rate hikes in the future to fight inflation. Now, here's the thing. Why these two in particular are talking about doing hefty rate hikes, because these two are considered doves. They're not well-known hawks in the Fed. They're considered doves. So the fact they spoke about this, the market now thinks, once again, like I said last week, I said in an episode last week, I think the market's kidding themselves that the Fed won't be aggressive. The Fed is committed to get inflation down to 2%. But like I say, two statements from two doves has now turned the dollar around. And this is why we're seeing a bit of dollar strength again. It's because of that, because of what they said. So the NFP number this week is going to be incredibly interesting. But anyway, Philip, like I said, let's have a quick look at the Aussie dollar, actually. Let's have a quick look at that. I like the idea of that. Let's have a look. Quick look at that. See how we're doing. Do you trade the Aussie dollar, Philip? Just out of interest, is that one of the instruments? Okay, currently trading 0.6928. So yes, again, dollar strength against it. Hasn't really benefited though, has it, from gold at the moment, which is interesting. Maybe started to rise with gold, but obviously don't forget we had the RBA as well, so that probably drove it a little bit. But yeah, since yesterday, we've had dollar strength again. So 0.69. Let's have a look, see if there's any areas of interest in particular. That's interesting. Around maybe 0.68740 would be quite interesting to keep an eye on. 0.6874. That's a potential area of interest, but that's interesting. Good stuff. Right. What else is happening today? Today we have EU retail sales, and that's due at 9 a.m. UTC. Expectation is for it to come in negative at minus 1.7%. Previously, it was 0.2%. I forgot to type that bit in. 0.2%. Trust me, it was 0.2. So anyway, it's going to be negative at 1.7. Plus, we have US ISM services PMI due at 2 p.m. today. Expectation is 53.5. The previous reading was 55.5. 0.3. So it'll be interesting to see that number. Something else which will take the focus today, we'll have a quick look at oil as well, actually, is the OPEC Plus. They're meeting today. And the market is taking a great interest in this meeting to see if Joe Biden was indeed successful with his request and his visits to the kingdom to increase supply. Now, many analysts think that potentially they won't do it, or potentially they can do it, because some countries in OPEC, like Iraq, Nigeria, are struggling with the current quotas. So whether or not they will be announced an increase in supply, many people in the market doubt it. But let's have a quick look at oil as well, actually, see how we are with that. Let's have a quick look at oil. See where we are. Right, yes, currently, yeah. Again, still under pressure. Currently trading at $92.40. $92.40. So we'll see if OPEC does indeed do anything to change the fortunes of it. Brent under $100 a barrel, currently trading at 98.96. So there we go. Okay, other major events this week. Like I said, we've got EU retail sales, ISM manufacturing services PMI today, Bank of England interest rate decision tomorrow, and US non-farm payroll and US unemployment. As the market stands, the FTSE is currently trading at negative 0.29, DAX currently trading at negative 0.23, and Eurostoxx currently trading at slightly higher at 0.30%. So don't forget, you guys can ask me questions anytime you wish. Oh, this is a good question. What's this? Mining in Australia is always the position positive in the economy in a strong position. Yeah, unless a coal market goes under or the move to greener oil sources. Yeah, I'm absolutely. I agree with you. I mean, I've been trading. I used to trade Aussie dollar, Philip, as a hedge for my gold positions, because obviously it's a major commodity on there. Like I say, Aussie will remain competitive because you're the powerhouse, one of the powerhouses in Asia Pacific, obviously. Very strong economy with that. And like I say, that's why the RBA, in my opinion, have been able to be a bit more aggressive than, say, for example, the Bank of England. Because the Bank of England faces a lot more of an uphill struggle. So that's why the Bank of England has been a little bit, have their hands tied in some ways, whereas the RBA can be a lot more aggressive. So that's good. Do you trade the Aussie dollar a lot then, Philip? Is that your favorite? One of your favorite pairs to trade? Just wondered. Excuse me. What time is it over there at the moment? Is it still quiet? Just need to silence some of the greenies out there. I get you. Oh, you do trade the dollar? You do you Aussie dollar? Excellent. Good man. I always find it fascinating. 4:15 p.m. in the afternoon. That's not too bad then. That's not too bad. That's brilliant, Philip. No, like I said, I do like the Aussie dollar. Like I said, I've used it as a hedge with my gold positions in the past. So, yeah, it's great. 4:15. Brilliant, Philip. Excellent. Is there any other questions? Anybody else like to have a chat? Say what, maybe even mention what you like to trade. What do you think about the situation in Taiwan at the moment? What do you think about the Bank of England? Are they going to do 50? Are they going to do 50 tomorrow? I think the market expects it, but they usually expect the BOE to do 25. I mean, I would personally, because of the inflation at 9.4, I would like them to take a bit more a risk and actually go a little bit higher than that. And like I said, again, like I say, I don't know if they can, because I'm the rock and a hard place, but it'd be good to see if they could do a little bit of a high, take an example from the RBA and the Fed, for example. Okay, if there is no more questions, don't forget, you can ask me a question. How long is Pelosi there for? I think she leaves today, actually. She was only a quick visit. She's not there very long. She's already met the president. So I think she flies out today. But like I said, it'd be interesting to see what China does in the coming weeks after she's left, and see what their reaction is then. But that's a good question. Don't forget, if you think of questions later, jot them in the comments below, either in the BOE 50, too many countries ahead on rates, don't want to fall behind. Yeah, well, like I say, I think they will definitely do 50. I love them to do a bit more. I mean, here's the thing. Here's the thing. The Bank of England was the first central bank to start raising rates, but they've also been now one of the slowest in momentum to increase it. Not as bad as the ECB, but you know, they've been a bit behind on the rest. But yeah, I think they definitely got to do 50. Definitely got to do 50, at least 50. Like I said, I'd love them to do a bit more, just so we can really get on top of that inflation. But very good point. Like I say, if you do think of questions later down the line, don't hesitate to put it in the comments on either Facebook or YouTube. And I will see it and I will answer it next time I'm online. Don't forget, I'll be back online again today at 1:30 p.m. UTC, maybe even 2 p.m. UTC, because I like to go on around that time as the US market opens. So please come along and join me for that. Anyway, if there is no more questions, big shout out to SMF 790 for your questions. Philip, you're a legend. Thank you so much for your questions, and your interaction is excellent. Absolutely excellent. I really love it, mate. Thank you so much. I really, really do. And I hope you have a fantastic day down under. I really do. Anyway, and like I say, I'll be back online again later this afternoon. So hopefully I'll see you all then. And yeah, as I always say, if you're watching me on Facebook and you like this little episode, by all means, give us a follow. If you're watching me on YouTube and you like this episode, by all means, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video and found it useful, interesting, and you put up with me being over the top enthusiastic for the market, which I can't help because I love the markets, give me one of those. It's nice to know that you like what I do. Anyway, oh, mate, thank you, buddy. Thank you, Philip. I love that. Thank you ever so much. I really appreciate it. I really appreciate you coming along and chatting with me. I really do. Anyway, till next time, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.